Hi friends, Simit here from InformedTrades.com. In today's video, we're going to review the Lending Club platform, what that is, and how income investors can use it as a part of their strategy. Let's get started. Okay, key points. Lending Club allows you to make loans to individual people, loans at interest. So it's basically like bonds, but you make them in small amounts. Lending Club also allows you to trade these notes that you've made. So if you make a loan to someone and it's going to be a 5-year loan, 60 months at 9% interest, you loan them $1,000. 2 years into it, you can trade it. You can sell it. They have a market that allows you to sell it, as well to buy loans that other people are looking to sell. Lending Club is SEC regulated, but it's still very experimental. So those are sort of the broad points. There are some key risks. We'll touch on those that investors need to bear in mind. Okay, selecting loans. So when you go to lendingclub.com, you sign up, you deposit your funds. That's all sort of standard administrative. Then, let's say you have money in your Lending Club account. Now you're looking for lender, or you're looking for borrowers. You're looking to loan it out. You can filter by a variety of criteria. So you'll see here, they list the interest rate on the loan, and there's also above that an alphanumeric score. The lower this score is, that's Lending Club's assessment of the risk of the borrower, the default risk, whether they're actually going to pay you back. Remember, every loan has default risk. Every credit instrument has default risk. There's always that chance that the borrower is going to be unable to pay you back. So Lending Club sort of has a score that allows you to evaluate that. And the lower the score, the lower the risk, the safer the loan, also the lower the interest rate. You'll notice here B5, 11.53. A3, 6.68. A1 is the best score, and A1 loans might be around 5% or so. G6 is the worst score, and you'll have that about 25%. You can see sort of the approximations of what each letter corresponds to. Each letter also has 5 numbers within it. So A1 is the best, A5, you can see that right here, A1, 5.93, A5, 7.89%. You can also specify the term of the loan. This is months, 36 months, so 3 years. There's only really 2 options. You can either do 36 months or 60 months, 3 years or 5 years. Okay, here in the third column is the borrower's FICO score. So in addition to Lending Club having its own alphanumeric score, there's also the conventional FICO score that's used, in all sorts of industries to evaluate a borrower. This is the amount they're looking to raise. And remember, even though a borrower, like in this second example here, they're looking to raise $10,000, the reason is to refinance their loan. You can see a lot of people want to pay off their credit card. They can do so at a lower interest rate through Lending Club. It's one of the most popular uses of the service. So this is the amount they're looking to raise, but Lending Club allows them to crowdfund it in reality. So, for instance, you can invest in increments as small as $25. So if I bought this here, I could invest, in $25 increments, so that could be $25, $50, $100, $1,000, but it doesn't need to be the full $10,000. They're going to get this from a whole bunch of people. Now, this is how far along, how much capital has been committed. You can see they're at 64% of the way, which means they have $3,550. Still need to find borrowers for that, or lenders who will give them that money, let them borrow that money. And your capital is only invested if the full amount is reached. So let's say, when a borrower comes on and they say, all right, I want to, borrow $10,000 for loan financing purpose, they specify a time frame, maybe 30 days or so. If that amount of capital, if that full amount of the $10,000 is not reached by their time period, then none of that money gets invested. So as a lender, your money goes through certain phases. At first, your money is committed, but it's only deployed, it's only actually borrowed if that full amount is reached. If that full amount is not reached, you get that $25 or $100 or $1,000, whatever you put in, back. So using this example here, let's say I invested $25 in this person's loan. That would reduce the outstanding amount they need from $35.50 to $35.25 that they need to collect within 10 days. If they do not collect that within 10 days, I get my $25 back. If they do collect it, the loan continues, and that money, I won't see the principal for another 36 months. And I'll start collecting interest payments every month. Interest payments are issued every month, so you can really, that's one of the, a lot of bonds, interest payments may be, issued, coupon payments may only come every 3 months, every quarter, or every semi-annually, every 6 months. Lending Club every month. Here is sort of the filters. There's a whole bunch of options you can filter by. Here are the ones that I filter by. Max debt to income ratio. I have that 25%, so I don't want a person's outstanding debt relative to their income to be greater than annual income to be greater than 25%. I look for a credit score of at least 690. Verified income is there's actual proof of their income, and that's one of the issues of Lending Club. There's still an issue of data uncertainty. We'll touch upon that a little bit more in the risk. I don't actually demand that their income be verified because that dramatically reduces the pool of eligible loans. And I found it to be pretty safe that these loans are pretty reliable. In my experience thus far, that's not to say that there isn't risk there as well. But I found that I'm able to get loans that are good for me, that I'm comfortable with the risk without demanding that the income of the borrower be verified. Loan purpose, I only do refinancing credit card or consolidating debt. What really appeals to me about Lending Club is that there are people out there with 17% loans, 20% loans, 15%. I'm more than happy to loan to them at a lower amount. I'll take 10%, 11%, especially in this environment, 9%. And they can use that capital to pay off their higher interest loans, pay me back and others back at a lower interest rate. To me, that's the great opportunity in Lending Club, why it makes a lot of sense. So those are the opportunities, the loan purpose I focus on. In 36 months, I'm also concerned in a current environment, I don't want too long of a maturity, so I focus on a loan term of 36 months. Okay, so after you've done selected your loans, you can view your entire portfolio, and you can also view your outstanding loans at the bottom here. You see it's a little cut off here, but this is just a screenshot of my screen. You can see your payments today, how much you collect, your interest, your principal, things like that. Here's your composition. You can see I'm at 44% of my loans are A-grade loans, and I don't have any below E. So I'm pretty conservative, and I think I'll stay with this approach. It's got me so far, I'm a little over 9% in my annual returns. I think it's like 9.3, and that's after fees and after defaults. I haven't had any defaults, although Lending Club encourages you to, and they'll give you estimates. They'll say you're on track for instance, they say I'm on track to earn 6%, but they're factoring, they're saying, you should expect some defaults. I haven't had any defaults, so right now I'm a little over 9%, which is great. Hopefully that continues. But that's just something to bear in mind. If I did want a higher interest rate, or if I did want higher, a shot at earning more, I could go for some of those, shift the balance of my portfolio from less A grade to more B, C, D, E, F, G. G loans can be 25%, 26%. Of course, there's higher risk. So, you're going to have more defaults, but the ones that do pay you back will have a higher interest rate. I'm just being pretty conservative, sticking to largely A and B grade loans. Okay, you can also trade your notes. So, first, this works both ways. You can buy other people's loans. Let's say someone, lent someone $100, and now they need the $100 back. So they want to sell their loan. You can go to the note trading platform within Lending Club. It's called Folio Investing. There's a link within Lending Club, and you can participate in that here. It's important to know that these are separate companies. Folio Investing is a separate company from Lending Club. There's partners, so there's a lot of disclaimers here. Folio Investing says if any of the information from Lending Club is wrong, it might be, and they're not verifying it. As I mentioned, I trust Lending Club's platform. I think it's worked out great for me so far. I've only been on a little over a year, but so far it seems legit. But that is definitely something to know. All of this is new, which is one of the risks involved. But with Folio Investing, when you're buying, you can specify a variety of things. You can buy loans that, because they're second-hand loans, there may only be 1 or 2 years left on them. So if you're looking for a maturity that's shorter than 3 years, you may want to go to the note trading platform, buy someone else's loan, rather than being the first issuer or the first lender. You can also get a markup or a discount. Some of these will trade at a discount. So, and I've sort of filtered for that here. You can see, here are some. There are only 2 loans that I found that meet these criteria. You can see all the criteria specified. They're actually trading at a discount. So the price of those loans has gone down. You can actually earn more. Now maybe it's gone down because the borrower's credit score has also gone down. So it's greater risk, and that's why it went down. But that's something to consider. There's trading opportunities here. for those who want to speculate. Of course, you should be careful with that. Lending Club has some restrictions in place. They're not going to allow you to mark up a loan more than 70%, and they're not going to allow you to sell at a price that has a negative yield to maturity. So if the principal and remaining interest on a loan is equal to $100, they're not going to let you sell that for $105. Okay, so that's sort of the aspect of buying notes secondhand. You can also sell notes secondhand, and I like this. I haven't done it at all. I haven't done it buying or selling of secondhand notes at all, but I like that this feature is available in the event that I need capital immediately. So, I have a small amount, or a somewhat reasonable amount of capital for me invested in Lending Club. I don't think I would come upon an emergency where I needed it, but it is certainly possible. And if that happens, I can at least look to sell my notes. I may have to sell it at a discount. I may be able to sell it at a profit, but at least has that option. Another thing that people may want to do is, here's some interest, or here's some loans that I have where the credit score of the borrower has declined. If you're uncomfortable with that, you may want to sell the loan. If the credit score has gone up, you may want to sell it at a premium, and earn some profit that way. So, you can sell notes for profit, just like the way you trade anything. For risk control, if you're concerned about the changes in the borrower's credit score or behavior, or for necessity, if you just need the cash right away, you're not able to have that money outstanding. The trading platform is a bit primitive. So that's something, there aren't many features to sort by. You can see that here. But, it's something, and I appreciate, I haven't used it, but I do like that it's there. Okay. So risks, and we've touched upon these in the earlier part of the video, but I definitely think it's worth focusing on and clearly defining. The data could be wrong. Lending Club's information could be wrong. Folio, if you're trading secondhand, that information could be wrong. Especially if the income isn't verified. So there's that element. I haven't experienced that to be a problem, but it's definitely, and I also think it's a problem that could be, in every market, right? There's liars and scams and false information all over the place. So data could be wrong. Loans could default. That's another risk that's inherent in all credit investments. The borrower promises to pay you back, but they might not pay you back. And third, the platform is still very new. So Lending Club, remember this is a group loan. It's a new platform. A lot of scenarios just haven't been explored yet. To me, that's part of what's exciting. And I think it's a great opportunity. I definitely think this is the future and is, something worth exploring and being a part of. But it is still very new, so you want to be careful. I personally wouldn't put a huge amount of capital in there for that reason. And I think the bond market still has some relevance because it may have a lot of flaws. There's a lot of corruption in the investment market in general, but at least it's big. It's huge. It's established. There's some security, something to be said for that, at least in my opinion. With Lending Club, it's so new, a lot of problems, may not even be imagined. There are a lot of scenarios where who knows what's going to happen, and we'll see. So I think it's great. I think it's part of the future, but I do think that's a risk that investors should bear in mind. And that's about it. Any questions you have, anything you want to add, join us at informedtrades.com. If you appreciate this video and want to see more, help us out. Visit informedtrades.com/donate. Any contributions you help will be greatly appreciated in helping us make better videos and advance our mission statement of helping traders learn. Also, if you like this video on YouTube, Google+, share it on Facebook, that also helps us out greatly as well. Best of luck in trading and investing, and we'll see you next time. Take care.